Hi everyone. So I wanted to expand on the idea of what is the difference between trading and investing. Alright, so essentially, although there are some skills that are transferable between the two activities, and they all occur within the same industry, you could be a stock trader or a stock investor, and many traders are investors, but not many investors are necessarily traders. Trading is really, it's a difference, first of all, it's a difference in time frames, right? Duration of trades. Traders are really more concerned with what is happening this coming week. Where do I need to position myself for the next few hours, next few days, possibly the next few weeks? Investors are essentially more concerned with where do I need to be position myself for the next few years. And so the difference is they'll tend to have to look for value. They'll have to that investors will have to look for inherent value, and they will have to then ride out the highs and the lows as it goes. Traders are really only focused on shorter term moves, and they're looking for a single move. They're looking for a high, so to speak, and not the low and the high and the next high and the next low. They're looking for the next move. Also, investors are looking to gain value over the long term, and whereas traders are really, they have the ability to be able to trade the markets in either direction. So if the market is going lower, they can actually trade it through the use of CFDs, for example, and then benefit from a move in any direction. Right now, the analogy that I would use, or a comparison I would use, is, for example, a real estate agent who is more concerned with making a sale so that he can get a paycheck at the end of the month, which is he or she can get a paycheck at the end of the month, and that's really their primary concern. If they're very successful, yes, of course, it's possible they might, they'll have a mortgage, they'll be putting money towards their mortgage, they might even have additional properties because they are in a position to be able to find properties and get them at a discount, and so on and so forth. So they can double up, or they can transfer their skills, and then they become a property investor. But in terms of, trading is effectively an activity that we do in the shorter term to earn us a monthly income. All right, that's to help us survive month to month, or grow our funds and grow our wealth continually or over time. The idea would then be that we would take a portion of our profits and then invest those into longer term asset classes where we see opportunities. Now, technical analysis can help traders to identify both shorter term trends and longer term trends, and therefore the skill is transferable. So it can help us identify really good entry points into, say, Facebook or MasterCard or Visa or Tesla, for example, where we identify a breakout's going to happen, and where we can also put an exit point. So if the market doesn't go against us, we're in and out, or where we would wish to exit and take some profit out of the market. So technical analysis is very powerful for that, and traders do benefit from that. Whereas traditionally, fundamental investors are really just looking at the value as they assess it in terms of maybe PE ratios, and there are some amazing formulas that can assist with that. So investing and fundamental investing is incredibly powerful when applied to stocks. It's incredible. It's very, very good. Value investing, as espoused by Buffett, Charlie Munger, his partner, Warren Buffett, Charlie Munger, and they got theirs from, I think it was Graham Hill, who was his lecturer at Varsity, where they understand value investing. That's incredible. So there's some amazing stuff out there to understand that. But that's very good. Whereas trying to apply fundamental analysis to currencies is insane. There are so many massive cogs, and there's two different parties, so you've then got to understand the economics of both countries at the same time. This is just an example. So fundamental analysis works a lot better when you're looking at sort of more commodities, more stocks. It's insane when you try to apply it to currencies. That's my personal opinion. I still haven't seen evidence of anyone successfully doing it consistently, of determining whether a currency, or because you've got to work out in one situation that a currency against all its other partners is undervalued as trading partners, meaning the sterling, for example. Is sterling undervalued now, and where should its value be, is incredibly difficult to do unless you have the resources to check that. But then that's very stressful to do that. Technical traders can simply just determine it's trending down, it's trending up, and benefit from that. So it's a lot less stressful to be a shorter term technical trader, perhaps, than a longer term investor. But you need to have a reason. Where do you get in? Where do you get out? And so today I was really talking about that difference in approach between trading and investing. Starting with, what is the headspace? I'm in this, I'm looking for a shorter term move as a trader, or alternatively, I'm going to get in at a decent price, and I'm expecting price to head up to this level as an investor, and I might be looking at a monthly chart, for example. But it's important because many people who want to learn how to trade start to inject their trades within an investing psychology. And so all of a sudden they get in on a shorter term trade, it doesn't quite hit their target, starts going against them. So now they start scaling in because now they've switched their brain to investing. They're going, well, I still think it's going to go back up. Whereas a trader would just get out and then reassess the situation. But now all of a sudden they start finding themselves getting in and exposing themselves as investors now because they've switched to an investing mindset, which is not really the approach as a trader. So there are many things you have to learn to train people who are doing that to actually untrain them. Untrain the bad habits of switching trades to investments, which is not really. But that's an example of how the bad negative influence of an investing mindset could negatively impact trading.